Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have POSABIT Systems Corp. Ticker is POSAF. Price on the point of findings is 75 cents. This is not a recommendation, not advice. Please do your own diligence before investing into anything, and please let me note down in the comments below if you have invested, will invest, or why not into POSABIT Systems Corp. And in general, what you think of this idea. PBIT was previously written up. PBIT, that's a different ticker, okay. PBIT was previously written up by Poupier over a year ago. I suggest reading that in the comments for background. Since the write-up, the company has executed well and done what management has said it is going to do. Something you don't see all that often in the microcap space or on the CSE. Recently, there have been a number of events that have been beneficial to PBIT that merit an updated pitch. For those new to the name, PBIT provides point of sale software and payment systems to marijuana dispensaries. It makes the bulk of its revenue and payments and is investing in software capabilities. It is a Canadian listed microcap that trades on the CSE, OTCPOSAF in the US. There we go, but is a US company that reports on in US dollars. The company, as of last quarter, has 8 million of cash and 170 million forward F/D shares out. 132 million plus another 38 million warrants slash options and RSU slash converted shares. It is a secular growth company, but one with a reasonable cap structure and seems to be managed well. Management has grown the company to this point with only 11 million of outside capital over the last 7 years. The most recent capital came from existing shareholders at a premium to the market price. There are some derivative liabilities from a convert and warrants the P&L look a little messy quarter to quarter. But the core business is being run well and the company is reinvesting gross profits back into the business to take share and scale the business. Despite the heavy investments through the income statement, the company is more or less EBITDA break even today. If they decided to stop investing aggressively and growing the business, something I wouldn't advise them to do, this would be a profitable company today. The 2023 is expected to be another strong growth year. I like and view PBIT as a shared taking story from cash and a secular growth story as more and more states legalize marijuana, more doors to sell into. First, the business is going well. Since 2017, the PBIT has doubled or nearly doubled revenues each year. For Q3, they broke 10 million in revenue, 10.3 million to be exact, with each month being a record revenue month. And the last update, it seemed they were on track for something similar in Q4. PBIT is growing fast, even as comps as dispensaries are mixed. It now has over 500 customers, and as of last quarter's earnings call, over 200 more in the pipeline. The 2022 guidance is for 37 to 40 million of revenue. They booked 25 million through Q3. This implies Q4 anywhere from $12 million, $48 million annualized to 50 million, 60 million annualized. A wide range, but this is a company that has provided thoughtful guidance and in many cases exceeded it. PBIT most likely exited in 2022 annualized more than 48 million of revenue, possibly 60 million, with a long growth runway. Further, I believe demand for BBIT services accelerated into year end due to recent events in the cannabis payment space, which I'll get to. Second, a favorable licensing deal was signed late in the summer. The deal was a licensing deal that comes with a minimum of 20 million paid to PBIT over the next 4 years, with the first year minimum payment for 3.9 million upfront. The fee is a royalty that can be bought out after 3 years at the greater of 30.75 million or 5x the royalty payment by the licensee. My understanding is that the licensee is a major MSO aggregator. The revenue associated with this deal is for already developed software and essentially drops right to EBIT. Third, recent disruptions in the cannabis payment space are an opportunity PBIT is positioned to capitalize on. In December, payment processors updated their software to remove cashless ATM as an option for dispensaries. A Bloomberg article estimated that roughly 7 billion of transactions got processed via this option, leaving many dispensaries with a lot of processing volume searching for alternatives. PBIT has invested in and is using a debit to the penny solution. The company is aggressively marketing and growing its pipeline with merchants that have left in the lurch, and it has also been getting inbound inquiries. Fourth, the current environment should create more opportunities. In 2021, money was free, multiples were high, and investors were plowing money into spaces like this based on TAMs. There now appears like there could be some more distress. Some distress. PBIT grew fast, but not too fast. Managed their capital structure and investor base well. The company is in a very good position to acquire bolt-on assets at now reasonable prices to cross-sell or realize further economies of scale. I expect the company to be in a position to do some things that create and increase long-term value. CEO Ryan Hamlin answering a related question on the most recent conference call. The other thing I would comment on is because there's so many companies that started in this space, like we've commented before, and have raised capital on unfortunately valuations they can't live into right now, and have P&Ls that aren't generating this kind of cash that they need to survive. They're living on whatever cash they raise, right? Because they'll have a very difficult time to raise anymore. So these are the opportunities. Like I said a few minutes ago, these are the opportunities where companies like us can take advantage of the situation. And there's definitely roll up strategies in play. As we look at how do we continue to grow aggressively, obviously we have a great sales team. They continue to add a ton, but we want to be aggressive and look and see if now is the time that we either do more strategic partnerships, potentially some acquisitions capabilities, but this is the time for companies like us that are strong to kind of take advantage of that. Some version of safe banking. Safe banking is federal legislation to legalize banking services to dispensaries. You can't really discuss BBIT without having a view on safe banking. My view is that we will get some form of it someday, but who knows when. It's possible, likely, we get to a critical mass of states legalizing that something needs to be done. I would expect that any legislation should benefit digital payments over cash for record keeping and tax collection purposes. That should create a land grab of sorts, but the company is set up to do Visa and MasterCard credit transactions the day they load. I'd expect some lag. A key feature of the software is inventory management and compliance, is something that may be difficult to build fast. Even if/when competition increases as a result of safe banking, I'd expect the company to be a net beneficiary as 70% of the company's customer sales are still being done with cash, and credit/debt card penetration elsewhere is much, much higher. The company's mission, I believe, is to be as big as possible before something like safe banking passes, and when something passes, perhaps sell to strategic. Valuation today, PBIT trades for just a hair more than 2 to 2.4x their EV annualized sales exiting Q4. Multiples everywhere have contracted as has PBITs from 3.4x as puppies right up to where we are today. But the company's growth has led to the shares more or less holding their ground. Today, very few companies have the growth and opportunity that PBIT has. The company has not provided 2023 guidance yet, but given the opportunity set and tailwinds, it isn't inconceivable for it to have a midpoint north of to $70 million range and exit 2023 run rating 80 million plus in revenues with more to come going forward. At this price, it seems like you could ride the growth of the business itself and not have to wait around for multiples to improve or for safe banking to pass. Though both of those eventual outcomes would be welcome. Catalyst, cashless ATM conversions to PBIT's debit to the penny solution. Safe banking one day. More legalization. Thank you very much for tuning in, and please let me know. I'm sorry. Please let me know down in the comments below what you think of this idea.